Yo, I'm gonna have your mic muted, but you can ask as many questions as you need. I'm actually pretty much just getting started. I called one trade so far, but might not trigger, who knows. I'm going to be mainly focusing on your Australian dollar, actually, just due to the data here. I'm going to be doing this pair from analyzing this pair from scratch. So, and this will be recorded as well. Look that low real quick. So I actually have to move this. So I did call the British pound Australian dollar for the chat, and actually let me open that up. Very simple analysis. All right, give me just 1 sec. Let the things load and we can go from there. Make sure I'm checking news and stuff like that. So you always gotta make sure you're in line with the news. I used to hate news because I used to have a hard time understanding news and how it affected the market. And then one day it just clicked, I guess. Okay, so for the euro and the Great British Pound, which is like my main pairs I like to trade, is we have President Lagarde speaking at 3:15 our time. And I'm going to get into trading USD pairs again because the USD is going to be declining quite soon too. So we have Powell speaking. I don't know. I had a brain fart. Powell speaking and crude oil inventory coming out. I think the crude oil inventory is going to be not good. This is going to be not good information as well for the speech. That's what I'm anticipating. But that's pretty much it for news reports that are huge. Oh yeah, pending home sales too. That's another nice report. It seems like lately the markets haven't been really reacting to news lately, so I found that pretty interesting. Not too much. Normally, if there's like an important news event that comes out, it'll be a volatile spike, either up or down, as the internet's so slow today. Anyways, your Australian dollar, I'll start to analyze this. You can get 2 entries on a trade. That could be 6% or 8% or whatever the case may be gain by scaling in. So the first thing I usually do is I'll zoom out and I like to see where the liquidity is. And in reference to, I don't think it's up top, in reference to other videos, the latest videos that I've posted, you can see where my crosshairs are. They took major internal liquidity right here. And I'll change that template real quick. They took major internal liquidity right here. Basically, this entire impulse move from here to here. That's all internal liquidity. And you can see right here that they traded below. At one point on August 25th, they traded below and they took that external and internal liquidity on bottom there. So the next thing I'm looking for after that, and this is the exact order for at least sales that I do my analysis, and I've been selling a lot lately because the economy, the world economy, has just been collapsing. So a lot of countries aren't doing so well. So they took that recent 4-hour liquidity. I'm gonna be doing like a 4-hour to 30-minute, 4-hour to 15-minute entry type vibes. This will load real quick. I have to start it over. Let's try this. It was just loading a second ago. Let's try that. So they recently took major 4-hour internal liquidity. And then after that, they immediately posted a strong high, which would be this wick right here. So I normally mark that off as well. So the first thing I'm looking for is a major internal liquidity take when I'm selling at least, and then a strong high to be posted. if it hasn't already been posted, I will use the impulse move that took the liquidity, and it's going to be tracing into some type of institutional footprint within that leg. So in this case, you can see this big impulse leg right here that took the internal liquidity. It did respect a, what is this right here? Pretty much an order block right here. And then, kind of rejected right there. And if you wanted to make sure, you can use your premium discount fib in order to kind of like pick your order blocks better. This is in premium territory. It's above the equilibrium here. So this is in premium territory. This right here is a game changer. This premium discount fib. So now that I know it did post a strong high, the strong high, the impulse move created by the strong high is going to be my new trading range, right? So we have a strong high right there, and they came for some external liquidity up top, but I won't mark that up just yet. My bad, wrong time, right? Stay on that. So right now, we do have a load. We do have a rejection, bearish predicted candles. I do not think that the euro has been having really bad news lately for a very long time, actually. And I do think that they are going to have continued bad news. Also, if you look right here, you have confluence, these are supply and demand levels. Essentially the same thing as order blocks. Supply and demand order blocks are the same thing. 1.5 is going to be a very significant level because it recently broke that 1.5 all the way past 1.45, and now it's retracing back up into, if you drew a fib here, premium discount fib from here to here, this would be premium territory, and that's what you want for shorts. On top of that, since last week, banks added more bearish lots basically to their position. So today is today's date is, to be honest, I haven't traded all week. 28th. Look at here, the 28th says that there's a rejection of 148 or 149.162. That's the high for that candle. 149.162. I always consider the high 149.162. So you take this and go just down to 162. And you can see right now 149.162 is right here, but it always ends up being liquidity, always. So I've noticed that lately the prime market terminal predicted levels will always end up being some form of liquidity. So now at that point, I usually will, let me escape this, I usually will analyze the charts, right? I look here and you can see that if I drew my premium and discount fib again, right? Because at that point you have the prime market terminal predicted level, a recent H4 internal liquidity take, and a strong high posted. So that's three things right there already. So I usually draw this in order to help me even pick my order block, which in my personal opinion, based on what I see here in terms of liquidity, this is a pretty solid order block right here. Pull this over, pretty solid order block right here. And I normally use my higher time frame point of interest, like a zone, I guess you can say. Pull this one all the way to the right. I do think that it's going to take this as a external liquidity up top, and then mitigate this essentially and keep going, since this is the only institutional footprint that is here. This is the only institutional footprint that is above all of the external liquidity. So normally what I'll do is I will draw in my higher time frame liquidity as well. So anything that's a lower high, because this is also the most immediate order block that's in the premium territory, right? So if there's a predicted candle of 149.162, that means it's going to take that liquidity up to the nearest institutional footprint, and then price is going to decline from there on a higher time frame. Oh, my bad, that's the wrong one. Make sure you're organized. So that's the liquidity on your higher time frame that needs to be taken before we consider the trade, right? So I'm looking for price to basically dig into this, getting a reaction. And then actually this would be your strong high wherever this ended up, this candle or next candle or two ended up would be your strong high. So that's kind of pending actually now that I'm looking a little deeper, that strong high there. So you can see the equal highs. If you draw from this wick to these wicks, they're relatively equal, which means there's external liquidity. Basically anything that's going to be a lower high to this here order block that recently broke structure right here. As you can see, this is the order block responsible for structure right here. So that's the order block that's responsible for breaking structure right here. There are many order blocks in premium territory, but you have to focus on the ones that specifically that took liquidity. And this is on your higher time frame and your lower time frame, and you'll get to see that in just a moment too, as an example. Like right here, you can see took all of the external liquidity on left right here. Let me zoom out and actually mark that up. Took all of the external liquidity right here. And that's how you know, like, is it going to be this order block or that order block? You have to figure out where the internal and external liquidity started and ended. So in this case, it took all of that external liquidity into what looks like a possible fair value. Yeah, this is an imbalance right here. See, let me make sure that this actually hit that imbalance. I like to be pretty thorough, so sometimes I'll do that just to see. Yeah, see, it's a pretty obvious imbalance right here, so you can draw that in if you wanted to for reference. It's really all about like figuring out where price has respected, you know what I mean, in terms of institutional footprints, and that just takes looking to your left. So you can see that that's pretty obvious. Just hit extend to the right, but I don't like to do that because it just looks weird to me. It barely mitigated it, but it did. So it took all of the external liquidity right here into an imbalance. If you look to the left, because liquidity and like the candles, they'll tell a story. You know what I mean? First of all, where did it respect? Where's the last major internal or external liquidity take? And then where did it leave off? So far, our price came up, right? Big move up, took all of that external liquidity, even up to here, traded into this imbalance perfectly, which if you want to, you can use that tool right there to mark it off. And I always like to mark off the wicks, and then you zoom out, right? Price came down, chased internal liquidity to right here, right? And now it's getting ready to post a strong high, right? So now this impulse move right here is going to be your new trading range, right? Until a strong high is posted. So I drew my premium discount fib, and all of the external liquidity that I see at least, so given the predicted candle confluence here, is going to come into and basically trade into the nearest order block that took liquidity. In this case, you can see right here, this is the order block right here, boom. And then this is the 4-hour change of character that happened. So it left all this liquidity, anything that's a lower high to this order block, even over to here. Technically, this is a lower high. If you zoom out from here to here, it's a lower high to this order block, right? In terms of structure. So that's kind of how the liquidity works. So I'm expecting price to come up and trade into my higher time frame point of interest. You're not interested in the trade unless you have your higher time frame point of interest dug into, basically. So that's what I'm looking for to happen. So we drop down to like an entry time frame real quick on a 30-minute and match that up, because I like to enter in the 30-minute just because the structure is clean, always clean, and it's just always clean. You know what I mean? The moves are always very obvious on the 30-minute. If you go down to the 15-minute, and the 15-minute is pretty nice too, but like if you go down to the 15-minute, there's a lot more topic candles to like work through. So 30-minute, it's more clear to me. 30-minute and hourly. So you can still intraday trade on the hourly and the 30-minute. You just have to keep your ratio short. You're not trying to swing trade. So Asian range wise, you can see that it took Asian range right here, which is obviously this box right here. So it started to take Asian range, and like I said, that kind of lines up pretty perfectly with the predicted level right here, the confluence for the internal and external liquidity, and then things like that. So now with this trade, I would be waiting for essentially a 30-minute candle to dig into this, and via the H4, and then once it did dig into that, like let's just say I'd be looking for a change of character, and then once I got that change of character, that's very sloppy. Let me try that again. Price is doing this. The H4 pushes up into the actual higher time frame PLI, which causes the 30 minutes to do the same thing. And essentially what you get there's still no trade, okay? There's still no trade, right? And then you have a change of character, which ends up being equating to price just trading below here, right? A candle close below would be even better. After price trades into there, right? We're going to find the order block that was responsible for taking that liquidity right here, right? So you got a 30 minutes. Once you find the order block that's responsible for taking that liquidity, right? You can also use your premium and discount fib on your 30-minute, right? And it will line up. As you can see, this would, this example would be in premium territory. I set and forget. That's my kind of like my motto. It makes trading a lot easier. And these are high probability trades based on liquidity and data and such. And then you can go for like a 1 to 3 or a 1 to 4 if you wanted to, from between the London session and New York session, should smash TP. I've been doing back testing as well, and I've gone as far as a 1 to 5. That's like my limit right there for my ratio. So this trade is exactly what I've been looking for once I get the change of character right here. On the 30-minute, breaking that structure, basically taking that liquidity, that's letting you know, right? Since internal liquidity is below and we're looking to short this, obviously, you want to basically make sure that the banks are going to be chasing liquidity on bottom, internal liquidity on your higher time frame. My bad, on your lower time frame. Once you have that confirmation, it's over. You can set a limit order, or you can wait for some rejections and wait for price to retrace. And basically, on the way down, it creates that external liquidity up top. So let's just say there were more lower highs right here. We'll try to draw in real quick on the way down on the impulse move. I'll fix that in a second. There are more lower highs, right? All that's going to be considered external liquidity as well. So you can take your external liquidity thing and then draw up all of the lower highs that are lower highs to the point of your new 30-minute point of interest area that you want to enter. Basically, it'll always be above the external liquidity. So in that case, once again, you just boom, boom, boom. And then you have your premium and discount fib confluence as well, and then you can put your ratio for a 1 to 3 or 1 to 4. Price is very likely to come up and tap this in very perfectly for a 1 to 3. That's essentially how I trade every single day, and it's a very good example. Now let me show you the example of the trade that I actually called already. Some of this so it's not in the way of the candles. This might take 30 minutes or so, to get actually all the way up here once London picks up a little bit more. All right, so this is a trade I called on the 30-minute. And sometimes, human error does occur, sometimes you pick the wrong zones and your trade gets missed by like 5 pips, and that's fine. That's going to happen. The key is to not be frustrated about it and to know that there's going to be opportunities afterwards, right? So same thing here. Great British Pound Australian dollar. The Great British Pound just hit all-time lows, but it's still overall bearish because retailers are still buying these pairs, right? You have a recent H4 internal liquidity take. strong high posted, right? This is a true strong high posted right after the internal liquidity take on a 4-hour, right? Price came up, used the impulse leg that took liquidity on the H4 as an institutional footprint. There's an imbalance here. So I'm gonna draw that in. Can you hear me at all? I guess I should make sure that first. Okay, perfect. So you can see clearly here, make sure it's not sloppy and zoom in some. Price took, in order to post that strong high, it uses that same impulse leg, right? And essentially, and I haven't covered this yet, because I haven't been able to upload videos because I haven't been able to work at all, but essentially this, actually I'm just gonna do this. And we'll change that to not an arrow. Essentially this, and we're gonna make it a little bit thicker actually. Let's do that. Essentially this and this, right? These two areas, this impulse move from here to here, that's your new trading range, this higher impulse move, that's what I'm trying to highlight. That could be your new trading range in terms of the strong high posted. So if you ever can run into a situation where you have a recent 4-hour internal liquidity take and you don't have a strong high posted, but you have this impulse leg right here, count on it chasing external next. This price moves from internal to external liquidity into some type of institutional footprint. And in this case, you have, and this is just analyzing this impulse move as an example, you have an imbalance that was in premium territory, which this was the imbalance that it did take. It did respect pretty perfectly, right? So now this is your new trading range until the strong high is posted. Once the strong high is posted and has an impulse move, well, now you have a new trading range. From here to here is your new trading range, etc., because it's already taken the liquidity that it wanted to from this impulse leg, came back up, took liquidity into the footprint, and then dropped. So every time that happens, you do have a new trading range in terms of your higher time frames. So pretty easy. Rinse, wash, repeat. So the strong high, if you don't see it posted yet, but you do see the internal liquidity take, what's going to be a thing is it's going to retrace and take external liquidity up top here into some type of institutional footprint. Normally it's the institutional footprint immediately above the internal liquidity. So what I typically do is I'll mark it all up. Sometimes I'll mark it up to here, and sometimes I'll mark it up to here. But like you have to use like a little bit of discernment and common sense to kind of see. I typically wait for actual price action. I wait for a candle or two to close. If you have to wait 8 hours and be like, okay, I'll take this up later. Instead of still not going anywhere, it'll still be there later. So that strong high was posted, and sometimes I'll do like to draw in, where it respected in terms of the footprints and stuff like that. At first, when I was kind of getting this down, that's what I would do. I would just, kind of like tell a story like, okay, I did that, and then I'd put that there just to mark where it rejected, and then I'd be like, okay, impulse move, took internal, my bad, right here where my crosshairs are, and then I have to face external trading range right here, given that the strong high did give an impulse move, and you can see that trading range was respected. If I drew a fib here, you can see that it rejected off of a very, very, very small. I guess you can count this as the rejection, this order block that took liquidity right here. And no, it's not kind of sloppy, to be honest. I don't like this move right here just because it didn't definitely indefinitely reject off of a institutional footprint. And this gap right here where this wick was, there was no fair value gap. It was an order block, but it didn't quite make it up to it to mitigate it. But it took some liquidity and basically continued down. Now we have here, right, where we have the most recent H4, and there's no predicted candles for this at all. So where we have the most recent H4 external liquidity take or internal liquidity take. Yeah, I guess you can mark off the liquidity if you like, but because I like to follow the liquidity. What happened last and what am I trying to kind of accomplish here? And you see external, internal all the way down to here, and now it has to chase external. So given that, I'm going to zoom in, and you can see it already started to retrace, started to retrace up after it took the external to take the internal. And that's that. My higher time frame point of interest is right here, just because I'm going to delete this one for now. Just because this is that last impulse move, the last liquidity take, and it took, draw this on your higher time frame. I never keep my higher time frame premium discount fib. I just use it as a reference, right? So in terms of external liquidity on the 4 hour, I noticed that it did take, recently took this external liquidity right here pretty beautifully, and then it wicked out right here and basically tapped that pretty perfectly with this wick right here on this with this wick right here, and then had a continuation and broke structure pretty perfectly. So I think price is going to come back up to the same point of interest, basically, because if it already took liquidity right here, that's the bank showing you that they don't have anywhere else to go. This is where they're interested in going, and that's period. There's no other really question about it. It took liquidity right here, and it dropped and broke structure on the 4 hour, and now they don't have anywhere else to go. They're not interested in going anywhere else because the strong high right here is going to be respected right here. It's going to be respected, and they've already shown that they have no interest in trading above it by having a continuation from right here, right? Otherwise, if they wanted to go way up here, right, they would have, and it would have been likely another imbalance fill or something of that effect. But that would require price to trade all the way up to your strong high, in which strong highs about 97% of the time are not broken. Typically, if a strong high is broken, it's due to news and things like that. So that's all, but pretty much some of the only circumstances that strong highs are broken. If like if Lagarde speaks about the euro and things like that, the European economy, and it's all bad news. Where's my tissue? And it's all bad news. And he's saying negative things about the outcome of the euro and the economy. That's going to affect anything having to do with the euro. So dropping down to 30-minute real quick, right? Because if you're doing a higher time frame analysis, there's no need to do anything else really. Turn this off real quick. Dropping down to the 30-minute. This is how it reflects. You can see even right here where price basically had a change of character, because this is the last time it chased its H4 external liquidity, right? Price chased that into here for a perfect entry into a higher time frame point of interest. But like I said, just because you see price wick out and reject does not mean a higher time frame point of interest doesn't mean that that's a trade. I always wait for a change of character, which if you think about higher highs and higher lows, this is a higher low, higher high, and then it failed to create a new high right here and basically broke structure. That's a fake change of character. Change of characters are only valid when they're coming off of a higher time frame point of interest. Anything else, you gotta get faked out, like right here. Let me duplicate this. Right here would have been a fake change of character, right? The reason for that, and ended up taking that liquidity. The reason for that is there was no, first of all, this is external liquidity up top still. So trying to use this order block when it indeed is external liquidity. And this is why you keep your higher time frame in sync to avoid this. I figured out that if you keep your higher time frame liquidity in check, basically, you don't have to worry about this. Price can't, because if you'd have waited until it dug into your higher time frame point of interest, which is obviously this yellow box right here, you wouldn't even be looking at the trade until that happened, right? Once it did, you had a very mean rejection, and then you had an actual change of character right here. I do count wicks because banks count wicks when they take liquidity. It's always trading above or below those wicks, as you've learned. So you had a change of character right here, and then followed by that, there was an immediate break of structure. And at that point, you can see clearly, I usually put my crosshairs at first just to make sure. And this is where you kind of got to get a little bit, get out of here. get a little bit detail oriented. I will have to start a new meeting. Zoom has been doing that lately. Every time I pay for Zoom, Zoom would tell me that I didn't pay for Zoom. So I have to find a new provider, which is weird. So you did have, and if you think about like regular liquidity, this is like a relatively equal high as these wicks right here. So this is the bullish candle, the last bullish candle before the change of character, right? Which is right here. That's going to be your order block right there that you're going to choose, right? And then you have relatively equal highs right here, right? So zooming out right here, I just basically put my trend line where my external liquidity was right here on the last, like kind of like the level of external liquidity, which would be to me this lower high. With above that, the actual order block that is. And what I'll do is I'll stitch this video and kind of like do a quick edit to make it all kind of flow well, because Zoom be tripping. What's above the external liquidity, which, like I said, anything that's a lower high to the supply or order block that caused the change of character. And you can either use an actual order block that you set a bearish engulfing, or you can use, and I haven't covered this yet either, you can use the last up candle before they change of character, right? They always use the kind of like bottom of the last up candle before the change of character. So depending on your preference, you can do an aggressive entry, which would be like right here, or you can do a conservative entry at the equilibrium, which is right here. I found that more often than not, the aggressive entry triggers pretty nicely as long as you have your stop loss behind the actual zone. So I believe, based on the fact that this already took that liquidity and things like that, it's going to have a continuation basically. Worst case scenario, and like I said, the human error, it's going to happen. Price does come up, because like trading is a game of probability and odds. You can have all the knowledge you want, but you're going to lose on trades. It does come up and basically retest this higher time frame point of interest again. You have a good amount of drawdown at about 0.5% drawdown. I'm risking 1%. I don't see any type of rejection basically at 0.5% drawdown. Any signs of slowing down in terms of the bullish candles, I'll close my trade at 0.5% and then get a re-entry basically, because it's only 0.5% that you lost in order to basically gain. You know, if you're going for a 1 to 3, it's like 2.5% gain, which is pretty good overall. So I'm looking for price to come up basically, and because there's equal highs right here, that's why I think it's going to take this liquidity. And because this was the mitigation that took liquidity on the 4-hour, that's why I think it's going to come up here, because this is an untapped order block basically that took liquidity that changed character, and then it obviously proves that it's going to change character with the breaker structure right here, breaker structure right here on this wick right here, and then the breaker structure right here as well. Always remember that a change of character is only valid under certain conditions, right? And even then, you should wait for a breaker structure to confirm the change of character, right? I always do, because I've figured out I've done some back testing and some losing too, where if I practice for 2 weeks, you know, I traded for 2 weeks like normal, just trading change of characters out of context, basically, without higher time frame mitigations. And essentially, what I found out is that when you don't wait for your higher, change of characters to come off of your higher time frame or your lower time frame, then typically you get faked out like this, where you'll get wicked out by like a pip or two. So context has to be there, has to be from your higher time frame, and then change of character. Anything earlier is going to be a fake change of character. So price came up, mitigated that, and this was the last bullish candle right here before the change of character, which was the wick that happened right here. So I like to point to the wick and or candle that's responsible for the change of character. That being said, this trade is going to be a little minute before it does trigger, but it will trigger. As you can see, it's got a lot of momentum. And then if you turn on Asian range, it's taking Asian range into Asian range. It's going to take Asian range into that and likely retest that for a nice 1 to 3. I like 1 to 3s because they always hit TP. If you can do 2 entries, 2 1 to 3s, that is 6% right there, easy, and you can be done for the day, really. So it might take a little minute to hit, but it does have to take this external liquidity where my crosshairs are, all the way up to here, and then it's gonna, it breeds a lot of sniper entries, and it's insane. So that's just an example of a few that I'm looking at. I already called this one for the group here. For the signals chat, I'm kind of hoping for like it's almost 2 a.m., like a 3 or 4 a.m. trigger, and maybe like during London or the overlap, it'll drop in the profit. 1 sec, I'll be right back. My son woke up. Okay, I'm back. So yeah, that's pretty much how I trade every single day. And same thing for bias, but opposite. You gotta wait for a strong low to be posted, change the character, break the structure. Candidate responsible for change your character is going to be your target, and then the rest is history. And let's see if there are any more. This is your Australian dollar still. Boy, this boy loves to be up. Give me 1 second. All right, so that's pretty much how I trade every time. And I normally don't have my kill zones on until I'm looking at occasion range being taken, which usually doesn't happen until about 1 or 2 a.m. anyways. So yeah, just rinse, wash, and repeat that. So zoom out, same thing here. This is an analyzed pair. So, most recent external liquidity take is what I usually look at. I zoom out all the time just to see if there's any more major ones that I can find. Very response Swiss franc doesn't really have a clean setup like that. The external liquidity or internal liquidity on bottom is kind of weird. It hasn't really taken any. I mean, it did way over here on the left, but I guess you can mark that up. But there's no strong high that was posted yet. So sometimes I don't like a setup, and I won't even trade it. It has to be there, So that's what the old markups here are. I haven't even touched this pair in quite some time. Out. Yeah, so it's the same thing. Zoom out. Delete the markups. Yeah, same thing. If you zoom out, you had a major 4-hour liquidity take right here. External, and then a strong high is currently being posted on this impulse move. So obviously this is going to be your trading range. Now, since it didn't post a strong high yet, I would say from here to here is going to be your trading range. And then you can see that's coming into deep premium territory for the sell. So which one caused the change of character on the 4-hour, right? Wasn't this one yet? Yeah, I would say it's this one. So this is going to be a higher time frame point of interest. If this video cuts off, I'll just send you a new link. That's what's going to have to happen, which is likely. Actually, let me end this video, and then I'll send you a new link. I'll be back in 2 minutes. Be right back. video. So back to what I was saying. Change this to higher time frame POI. So let me zoom out to see on GN. Yeah, so you had once again, you had the 4-hour internal liquidity take right here. So, yeah, it did not post a strong high yet, so I'm going to use this impulse move as a reference for basically where it's going to reject off of and where it's going to respect. And the only order block that I see that before like a DDA change of character that happened on the 4-hour was this one. This was the last one that actually caused that. So, oh, he loves being up. Give me 1 second. Okay, so he's like a heavy middle of the night guy. Higher time frame point of interest, and you had the higher time frame POI. The reason why I chose this is deepest in premium territory right here via my fib, and it's here's the last bullish candle that's responsible for the change of character. None of these change characters, technically speaking. So I do believe price is going to come back up and basically take that. Drop down to the 30-minute where I typically like to enter. You can see all of the confirmations. You can see all of the external liquidity. I would say up to here, right? This is a pretty defined lower high, kind of bounced around right there. Right? All going to be external liquidity on the 30-minute. So you have to make sure you're transferring your liquidity down to the 30-minute and drawing in your higher time frame liquidity and your lower time frame liquidity, right? So like I said, I never keep the premium discount fib on my higher time frame, but on my lower time frame I will, just from the latest impulse move. Whatever. 1 sec, I'll be right back. Okay. He like loses his bottle and freaks out, I swear. Kid is a hungry kid. So if you draw your premium and discount fib right here, you can see that I would be waiting for all of the external liquidity up top to be taken on my entry time frame, which has not happened yet. Change this template. And then price would come up and basically tap this order block. So transferring from the 4-hour change of character, and I'll move that over real quick. That is transferring from the 4-hour change of character. You can see that this was the 30-minute order block that basically took liquidity recently, changed character. So prices is bound to come all the way back up here, basically into this 30 minutes block liquidity. And the reason for that is if you go up to the 4-hour, you can see clearly that's where it worked out. So that's, you're pretty much fine-tuning it from the 4-hour block. If I pull this to the left, it does cover some of that 4-hour point of interest that I just drew in. So that's the reason why. And basically, that's the one that's deepest in the premium territory, and that's the one that's above all of the external liquidity, right? So I'm expecting price to take all of that while creating some external liquidity even, right? Because even this lower high right here is going to be external liquidity. Anything that's a lower high to the point of interest is going to be external liquidity up to the point where it actually mitigates it, right? So that helps a lot with like, okay, where do I go? If you notice, I use premium discount fib a lot, and it helps a lot with choosing order blocks. So you mark up the liquidity, and then you use the rules of did it post a strong high, yes or no? If it did, that strong high, that the strong high with the impulse move down or up is going to be your new trading range. If not, like you see here on your higher time frame, it hadn't posted a strong high technically yet. After the internal liquidity take, it's just kind of like retracing, getting ready to post one. The impulse move that took the external liquidity, or my bad, the internal liquidity on bottom here is going to be your range for where it's going to come up and mitigate. So your strong high will always be posted where the deepest footprint in premium territory is. So yeah, that's when I usually draw my fib. And then I'll be like, okay, bet it's this one. And then it's my point of interest. And then I'll go up to the 30-minute, 15-minute, whatever you really want. And do the same thing, right? I'll delete my premium discount fib on that and draw it on here instead. The higher time frame stuff is nice, but you only want to draw that for a point of reference for where, which order block do I choose. It kind of helps a lot, actually. And in this case, you can see that it still has not taken all of the external liquidity up top, the footprint that's up top. Inside of actually your higher time frame point of interest, it actually took liquidity. And if you draw this over to the right, you can see this is that 4-hour change of character, but just only a 30-minute. A little bit more 4-hour change of character, but just only a 30-minute time frame, right? So if you pull this all the way to the right and point to the actual candle, you can see that this is obviously the order block inside of your higher time frame POI, untapped with liquidity right here. You can mark that up real quick too. This is the last real lower high, and right here. Last real lower high right here. So I'd be looking for it to take that basically all the way into this guy right here. And the rest is history. It's that simple. We're going to just say you wanted to do a 1 to 4 here, and you're like, bet before noon, and before London starts to slow down a lot, I expect this to be hit, triggered and hit, and that's that. I know that this is my trading range because I haven't posted a strong high in my higher time frame. I know that the external liquidity has not all been taken, and if you're thinking about relatively equal highs, this wick and then this wick are very relatively equal. And yeah, that's pretty much it. You drop a 1 if you get that. And you can even go a tighter stop loss if you wanted to. Do a 1 to 5. It's up to you. Something that you would have to back test your entries. Once you get more confident, you can have tighter stop losses for bigger ratios, basically. All right, here it goes again. I'll be right back. Trying to make sure my wife gets some sleep, man. I'll be up, so I was like, why wake her up? So yeah, man. So that's pretty much it. You can kind of tweak the ratio a little bit. I like to go to 4 to 1s or 5 to 3 to 1 to 3s or up to 5 to 3s, but that's the biggest I'll do. In this case, the market's been kind of just now picking up its normal volatility. So I've been doing 1 to 3s until I see some crazy candles coming, consistently when I'm, actively trading. Like if I saw one candle fill half my TP and it was a regular thing for like weeks on end, then I would say like, okay, market volatility is kind of coming back in a way. So yeah, that's and I use limit orders too. Because you have all that confluence that I just named off. You have recent 4-hour internal liquidity take. You have, and you can write down your confirmations too. It helps a lot. Using this text tool, you can write down your confirmations like, oh, 1, I have this, 2, I have this, 3. And the next thing you know, you're looking, you have 7 confluences, right? H4 liquidity, internal liquidity take. Now you know they have to chase external, right? No strong high posted yet for this, so you know that they're going to come up and they're going to use this impulse move right here, where this premium discount fib is, to retrace back into some type of institutional footprint above, which it has to take external liquidity up top in order to do that. So you can see the external liquidity coming up top here. So that's more confluence because you know how liquidity moves, and this is the 4-hour order block that took liquidity via this wick right here that traded to below. Actually, let me get you a better view on that. Via this wick that traded below, right? So that's the one that took liquidity, is the one that changed character on the 4-hour tool, which is major. So that's going to be, and that's the one deepest in premium territory. So that's going to be my point of interest on top of there. And on top of that, it already took external liquidity here and mitigated that perfectly for the drop. So that's a lot of confluence for your higher time frame. At that point, there's really nothing more that you need to question other than waiting for the setup to actually happen, right? Go down to your lower time frame, and then now you know you have a higher time frame reference for liquidity, which is major. Now you're looking for a lower time frame reference for liquidity. You want to make sure that your lower time frame liquidity matches up with your higher time frame liquidity. So in that case, you have price coming up, and you have all of the external liquidity right here. If you don't like to draw it like this, because I do like to draw it like this, it just helps me visualize. Sometimes I'll get caught up and I'll get too tunnel vision every once in a while, and I'm like, oh, right here, and I get too anxious for the setup, and that's kind of one of my problems. I get too anxious for the setup, get impatient, not pay attention, zoom out a little bit. These are relatively equal highs, technically speaking, between these two candles and all of these candles. So you could either draw your external liquidity like this, where you just kind of find the last line of defense right here relative to your actual order block that you chose, or you can do the trend line method where you kind of like bring it down on the trend line. So right here, I would update this because this is still right here, external liquidity. It's a lower high to your lower time frame point of interest, right? As price progresses, I'm going to update this until there's no more external liquidity. And I'm like, okay, well, it's about to tap in a second here. So, and then you have Asian range and kill zones as well, but mainly Asian range. I use kill zones if there's kill zones inside of your that might line up with your lower time frame point of interest, like your London and the New York kill zone right here, along with Asian range, and that's even more confluent. But in this case, we have Asian range, and the kill zone hasn't been created yet because it hasn't made it to the area that banks want to, which is up here, right? So then you start to analyze the impulse move that happened. But when you start your entry time frame, you look, okay, you're like, yeah, I'm a trade character right here. That actually happened off of my previous higher time frame mitigation. Boom, it changed character. Always remember that a change of character is just an unconfirmed shift in liquidity, right? In which they're chasing, right? So if they're chasing internal, and then they go up and they chase external, you want them, if you're selling, to be chasing internal again, but you need to confirm that, right? With a change of character, I normally wait for a change of character and a break of structure. The break of structure, it just confirms that they are indeed chasing the proper liquidity, because you have to think like you're a bank, you know what I mean? Like you're stopping our retail traders, right? When they are chasing proper liquidity, right? To take out buyers who bought on this big impulse move right here, up, all the way up, and they're going to take those guys out. You want to be in that trade with them. That's kind of how you have to think in terms of trading. You have to think like, I wake up every day and I take out retailers with the banks, and then I go to sleep. You know what I mean? So kind of shift your mindset to like you are the bank. You know what I mean? Where are retail traders? Where's the liquidity? Where's liquidity stop to end? And where is the likely point of interest that the banks are going to be buying and selling from? And you just create confluence with that. So, and if I drew my premium discount fib right here, once again, it is the same deal, right? Like I said, I never keep it on a higher time frame. I just draw out temporarily defined my all the way down here. I'm gonna delete this actually. This is the higher time frame one, all the way down here. And you can see that obviously this is going to be the deepest one into premium territory, very deep into premium territory, and that's more confluence even. So that's pretty much the extent of my analysis every single day. I keep my trading very simple and just use a few things to liquidity, change of character, break of structure, with context though. The context, once again, it has to be there. And I'll use this here call out button to mark up things like here's the supply or like that caused the change of character, you know, just to have that there on my entry time frame. And it's the same thing for my any time frame really. It's the same confirmation that you're looking for. It doesn't matter what time frame you're entering on. If it's on a 5 minute, it's the same thing. You're looking for that change of character. You're looking for the order block that's going to be responsible for the change of character, along with the break of structure and everything. It always comes back to the original order block that did change character, right? Never the one that broke structure in this case. The only reason why I did for this one is because it did come back to this one that broke structure. This was if you look, this one right here was the one that broke structure, but it just did that to create liquidity in order for all that to be taken out. So basically anything that's not, if this is an untapped order block that changed character coming off of a higher time frame point of interest, everything below that's going to be a pack basically, and price is going to come up and take all that out into that. Like I said, normally this breeds very big sniper entries where it'll be like to the pip, or you might have a little bit of drawdown, but then it'll tank. You know what I mean? And I wouldn't consider that a bad thing because drawdown is normal, as long as you're not having, you know, you're risking 1%, as long as you're not, you know, almost getting tapped out every time. You know, in that case, then you're probably choosing the wrong zones by a little bit, and that's what you need to work on. So I always tell people, use common sense in your trading. If you are having trades, if you're getting tapped out and then having trades going in your favor, it's likely that you're missing some liquidity or you're choosing the wrong zones, and that will affect your entries. And that might be all you have to work on in order to be profitable. So kind of like think about what's happening in your trading and journal your trades too. It's really important. If you don't have any documented things, you don't have anything to improve upon. So you can kind of start to see patterns in your trading. So the reason why people have such a hard time trading is because they have a hard time improving themselves. Self-improvement is very rare these days for people. That's why relationships are bad most times, just because, you know, the female or whoever is sick of the person acting a certain way and they won't change. So it's the same thing. People have a very hard time with self-improvement. So, and actually doing the work. I don't know what I was doing here, but it wasn't good. Well, that's funny. And then Great British Pound CAD is going to be the exact same thing. Rinse, wash, repeat. I essentially look for the same setups all the time. Let's see, where was the one I was just on? GMs, analyzed, GU. I won't be trading GU just because, of the, where is it at? Where is it at? We have several just big reports coming out. You know what I mean? Several big reports coming out, and typically I avoid news. But if I have read reports on what people and what investors basically think the news outcome is going to be, and like I stay in the loop when it comes to everyone's economy. The U.S. dollar, the Australian dollar, the New Zealand dollar, some Great British Pound and Euro are going to be my main. So I'm always like watching the news, and I have Yahoo Finance. You know, I follow them, and they'll announce some things like earlier Monday or Tuesday. I saw an article. I couldn't read it, but I saw an article that said, you know, Great British Pound drops to new all-time lows compared to the U.S. dollar. So now today I'm looking back, and you can see the move that happened the last couple of days that caused this big impulse move down. So that's what they're talking about. That means the Great British Pound as a currency is not worth very much. It's dropped low, the value of the Great British Pound because of, recession and things that they're going through over in the UK. Same thing with the euro. Europe is going through recession. They're having an energy crisis because Russia cut them off on their gas because they bought all their gas from Russia essentially, and that drove up energy prices there. And most people are paying £1,000 a month for an electric bill now. So, or €1,000 a month for an electric bill. Imagine having a country that literally supply like 90% of your gas cut you off because of a war that's going on, and you're on the opposite side of that war. We're not at war with them right now, but like the European Union, which is the people who kind of govern Europe, agreed that obviously what Putin is doing is wrong. Just kind of getting up and randomly invading a country and saying, "Hey, this is mine." It's very illegal internationally. So I spent almost a decade in the army, so I know about all that stuff. So it's very, very illegal, a lot of war crimes, and now Russia is calling for Putin to resign out of office. But that's not how that works because Russia is a communist dictatorship country. So it'd be kind of a hard time not to trigger World War III in that regard. So because he's already threatened in the last week, he's threatened to nuke the United States. So that's a big deal. All that's a really big deal in reference to trading. And the reason for that is these are world events and countries are affected, right? It's like Europe right now. The reason why the euro has been so weak for the last, since the Ukraine war started, is because that directly affects them, right? Ukraine's right by a bunch of European countries. It's like connected to a bunch of European countries. And the banks have been negative on the euro since the war, right? Any type of war or talks of war is going to affect, or talks of inflation or recession is going to affect that country's economy to the point where banks will invest their money into a short. So in this case, if it'll load real quick, in this case, since the Ukraine war, banks have been negative. You can see these are all individual weeks that they have been changing their position. And so far, over time, they've been changing their position to get to the point of being negative 4.2. Look at that. The last time they were actually positive was this week. It was like 6 to 10 weeks ago now plus. So it's been negative in their positions. And that's showing you that investors feel like the euro is not doing well. On top of that, retailers have been buying this pair for quite some time. Get out of here. And that all plays in effects. That's also stuff that I look at, conflict data and things like that. It's a huge part of my strategy. It's conflict data, prime market terminal, predicted candles and stuff like that. It's showing up the euro, and that matches up the fundamentals that I just mentioned. It's showing you that the euro and the Great British Pound are going to continue to fall for quite some time, and there's nothing anybody can do about it, basically. So that being said, that's how I analyze pairs. Even like I don't trade this pair because it doesn't respect my strategy, but like DJ is a popular pair amongst forex traders, right? Delete this. And it doesn't respect really like the order blocks for supply and demand. Any JPY pair doesn't respect my stuff at all. Don't ask me why. It's just that way. And same thing with GJ. You can see the GJ drop that's been happening. That's because the Great British Pound dropped to an all-time low, right? So it's literally Great British Pound versus the Japanese yen. And if they're saying that it dropped to an all-time low, you look at the chart and compare that and use that as a fundamental, basically, and go from there, right? So I like to find out the reason why things, you know what I mean? Why did it drop to an all-time low? What's affecting that their country that's to that point? And the rest is history. You kind of put two and two together. Like the U.S. dollar right now is going through inflation and things like that. Inflation talks, because once you hit, we're at 4.85% inflation, I believe. And once you hit 5% inflation, it takes about 10 years to get back down to like 2%. So let's just say USD CAD, you can see that like retailers are shorting this pair still, but I don't think it'll be for long based on this. Let's get that open real quick. Because there have been recession talks for a while. Once you hit 5% inflation in a country that is considered a full recession, that's when things will get more expensive and et cetera, et cetera. And obviously, the rich don't really feel like the effects of the inflation, like the super rich and stuff like that. But the people who are just regular people who work jobs, they do. You know what I mean? A loaf of bread is gonna be $9. So, you know what I mean? Things like that, where people can't afford to really live because of the country they live in. So I'm gonna scroll to the right here. They've been net positive on the USD for quite some time, right? The USD was doing very well compared to the rest of the world. And suddenly this week, they're negative 22.3%. So that's very alarming for me, considering the US, I live in the United States. So that's very alarming to me, considering that the US dollar has been doing well. And I always read my reports, do my research reports back here. And like with Barclays and Goldman Sachs and things like that, what they think is the biggest investors in the world. All these are big central banks that trade forex too. So I read what they think too in terms of the euro, USD, etc. And they've been talking about the USD going down for weeks and weeks, but I was like, when's it going to actually happen? Well, here it is, positive 10% to negative 22%. That's a very, very, very large jump in position from positive to net negative. And so with that being said, in the coming weeks, I expect retailers to start to buy this and flip their positions as well, and then them to continue to add onto this. Given that, to me, this means that basically banks, investors think that, they're usually about 90-95% correct. They basically think that, because they base these off facts and real data, themselves, the U.S. is going to go into a very major recession, and it's going to be a bad time. So that's one thing that I did notice today or this week, on Sunday, before my religious observation happened. So that is that. So rinse, wash, repeat. Let's see, check on this guy right here. And it might take, a couple of hours for this one to trigger, but I think your Australian dollar will be good to go in a little bit. You can see the candles that are presenting themselves are in the form of bullish rejections. It's pretty much respecting this bullish oil block right here and continuing to the upside. So I do expect that to come into this higher time frame point of interest right here in this area, and that'll be a strong high if we play out up to the 4 hour. Remember how the structure was. That'll be a strong high right there, since it didn't create one after the 4 hour internal liquidity take. I'm going to use this impulse move as, you have to chase external next, and whereas all of the external is going to be on this impulse move. If you remember from the few new videos, you remember that external liquidity are all of the lower highs on a bearish impulse move, for shorts, at least for sells. So I hadn't posted a strong high just yet, but it's trying to. It's on its way to. So I do expect that to happen. Usually it seems kind of like it's going to be slow, but then out of nowhere, there'll be a very strong H4 candle that does its thing. So at this point, at the point that your point of interest and, the confirmation that you're going to be looking for, it's all about patience, right? Price will dig into that 30-minute time frame. Will also follow, obviously, and then you have confirmations like change of character, break structure. You find that'll cause the impulse move, obviously, and then you'll draw your premium discount fib, and even if it does all of that, right, you're gonna draw your premium discount fib and essentially find the order block that is responsible for the change of character, which, let's just say it's this on this lower high, right? That means it's going to take all external liquidity, right? All external liquidity up to that lower high. Change of character right there, and then now that your 30-minute supply and or order block, boom, and then that's it. I set a limit order because liquidity is in line, your higher time frame reference is in line. So my stop loss just behind here. everything is in line. Drop this down to a 1 to 5 even. Get out of here. A 1 to 5 this time, and the rest is history. To be honest, you can just sit back and wait for it to trigger, right? So that's how I trade. I usually do that, and I'll set 2 limit orders after I've got my confirmations and then go to sleep. A lot of people like to see, kind of for their own psychology, they like to see like, oh, I need to see a trigger and then drop into profit. I get that, you know, I get that whole like peace of mind thing. I used to like need that too, and that's okay if you do. But after a while, you gotta kind of trust yourself and trust your analysis. Like I know long term, if I take 10 trades, right, I'm gonna win, you know, 70, 80%, 85% of those trades if I'm on a really high win streak. And I trust my, you know, at the end of the day, I trust my strategy because I've tested it. You know, I've tested it a million times. I've back tested every Friday. It's like a tradition for me to back test, you know, like how I end my day. It's like breeding more confidence in my strategy. I go back and I look at passives that have happened, look at the change of character, the break of structure, look at price, taking all of the external liquidity, and coming back to the 30-minute order block that's in premium territory on my entry time frame. I'll look on a higher time frame too, and I'll compare. I'm like, your Australian dollar, what's happened here? You know what I mean? Did it come back? Did it not? Boom. Because if you start to see patterns, right, and things that happen over and over and over again, there's really not much questioning you have to do because at that point the charts are showing you, hey, this has happened over and over and over again. I set and forget. And I typically take 1 to 2 trades a night, a session. You know, I don't trade 2 sessions unless I'm really like trying to like save up for something or something like that, something major. Maybe maybe you want to buy some more property. Maybe you have a goal. You know, at first when you're first like building your trading account or passing a funding challenge, and you get to that point of being past it, yeah, you want to hustle for sure because like this is an opportunity you have to kind of take and not take for granted because this is a skill. Like some people go to school to be a doctor, some people go to school to be a journeyman, some people go to school to be a carpenter. You know, it's like the same thing. You go to school to become a trader. It's the same thing. A lot of people would think this is like some complicated thing. It's like if you went to school for 24 weeks for a coding boot camp, that's a whole skill. You learn 5 different coding languages in 24 weeks. This is the same thing, right? Somebody who took, you know, the right course from the right mentor, or whatever the case may be, can learn how to trade in like 3 to 6 months, realistically. If, you know, the person's a good teacher. I don't know why people take it, and I'm not putting a time limit on like someone's journey, but like 3 to 6 months, they can have the concepts down enough so that they can be like, all they have to do is fine tune it from there. You know what I mean? Maybe a few months after that, a little bit after that, they're, you know, start to become profitable. But I set and forget because I know that it's very likely that this is going to trigger very perfectly and then go into profit. If it doesn't, it's just 1%. And that's why I typically take 2 trades. It's because if one does not work out, the other one usually does, the vast majority of the time. So if I'm going for 3%, that's a 2% gain in one day. I could be done for the day right there. Or if I want for 5% for one and 3% for the other, 3% one gets tapped out and the 5% one goes into profit by 11 a.m. I'm pretty much like right here about to smash TP, and I've gotten 4% for the day, which is a very good return. If you can average 4% every day, 3% every day, that's what, 5 days a week, 3, 6, 9, 12, 15% in a week. So if you do 15% in a week times 4 weeks, that's 60% in a month. And that's actually 3% in a day is not very hard to come by. You won't always have green days. There are times where I don't even have green days all of the time. You know, sometimes I'll have 2 bad days in a row, but I know when to quit. You know, that's the only thing difference is when I'm -1 or -2% for the day, I'm done. You know what I mean? If I'm -1%, I might take one more setup. But if I'm -2% for the day, my rule is that if I lose 2 trades in a row, I'm done for the day, because at that point, you're just forcing it. You know what I mean? You have to be not a professional trader, but a professional risk manager. You know, you have a funded account. Most funded accounts, once you get them, you can't even lose 10% in a single month. And that just takes being very picky on your setups and being very, like, knowing when to be done for the day. You know what I mean? Preserve your risk. If you're losing 1% or 2% for a day, that's not a bad thing at all. It's actually quite normal, because you still have the rest of the week to trade. You know what I mean? And you can make that up in one trade. You can do a 1 to 3 and now you're at 1%, compared to yesterday. So you have to know when to trade, when to not. Don't be greedy. It's a really key thing. These are things that I struggle with personally as well myself. That's why I've gone through all of the emotions you could possibly think of when it comes to trading. I was not meant for trading. I actually got introduced to trading when I was in my earlier 20s, and I did not like it at all. And if you would have told me back then that I'd become a full-time trader now, I would have been like, no, that's too complicated because I didn't get it. But it came back around 3.5 years ago now, and I just committed myself to it, and the rest is history. But personally, myself, in my opinion, I don't think that I was meant to be a trader. I just didn't want to. I just didn't want to not do it. I saw the income potential. That's my brain developed when we matured more. Saw the income potential, and I was like, at a minimum, I want the skill and to be able to just kind of trade anytime I want to, even if I have to go like part-time or whatever the case may be. But I worked very obsessively and very hard and back tested some things and built trust in my mind for my own strategy. So I developed it, and the rest is history. So now I set and forget all of my trades. Every single one gets set and forget. So as the night progresses, I do expect, like I said, this to trigger at some point. If it doesn't trigger, I would cancel the order and then just come back to it the next day London session, because likely there will be an impulse move, or from here, or if it hasn't finished like taking all the external liquidity, that means the setup wasn't ready today. It will be ready another day. So you cancel the order and you keep this in mind for yourself for the next London session. So that's pretty much it for kind of like how I trade. I trade change of character, break structure with context from my higher time frame point of interest, which, as you can see, is pretty effective. So I wonder if I have, real quick, any good trades that I've documented to show you. I think it might be here it is. Yeah. In there. Real quick. Because I think I'm gonna go to sleep in a second. I got some things to do in the morning, but like I might take a London session trade. That's not it. That's the wrong folder. That's the wrong Google Drive. Where is it at? I know I have some good trade ideas. So this is an example real quick of a trade that I did project. If I remember right, this did actually tap in just like that and then smash TP, but it's the same thing, higher time frame POI. This is the one that changed character, the order block that changed character. Price did end up coming back up. Retesting this perfectly and smash TP for a 1 to 4. So that's just like one example of, because I document my trades. If they're going to be good trades, then I'll document that and I'll take a picture of that. That way you always know what a good setup looks like, especially when they work out. Just take a picture of it, and you can even save it from here and put it in your Google Drive, put it in a folder, and now you have documentation. Do you have any more questions real quick? Do you have any questions? Okay, perfect. Yeah, so that's pretty much that. And it's raining real hard here. That's pretty much that when it comes to my trading, and it's the same thing for longs. We can next time I'll find a long idea. Maybe, and you can take as many of these sessions as you want to for the rest of the week if you have time. That's what you paid for. So if you want to join me next session as well, you can do that. But I'm gonna put this video together for you. It'll be available today. I'll just stitch it together real quick, both videos, and then kind of upload it to YouTube and then post it. Perfect. All right. I will see you tomorrow. Just let me know if you want to join another session. All right. See you later. Yo, how's it going? So, your Australian dollar we just got into, and I'm gonna real quick break down the reason why as like a bonus. And like, yeah, I could get tapped out of this trade. It's not a big deal. You got street losses like business expenses, in trading. Um, so, um, as mentioned earlier in the earlier portion of the video, you had H4 external liquidity take, and this impulse move is the one that was responsible for taking, right, the H4 internal liquidity, right? Basically, this impulse move was all internal liquidity, took all that, traded below it, and now currently this is the strong high, right? So following that, it has to chase external, which it did, and I did an ample explanation as to why I chose this order block right here, right? Zooming in early in the video, so zooming in, I did see very nice rejection of that POI. Once I did dig into it, I was patient and I waited for that to happen. And essentially, I dropped down to the 30-minute and I waited for a reaction to that, right? Once I got that reaction, I had some Asian range confluence right here, and that's this box. And these are confirmations that I'm looking for a possible second entry. This was a little bit of a higher risk entry, but then again, it wasn't because we had so many confluences for this trade. We had the actual H4 point of interest, which is this yellow box right here, mitigated. And then we had the London kill zone formed after the Asian range. We had all H4 external liquidity taken, as well as the London kill zone, like I said, formed right here, right? So that gave me confluence, and I was like, well, I'm going to enter in a 30-minute, and then it's just now dropping into profit. Like I said, I just want to break down the trade, win or lose. We had the supply order block close right here on the 30-minute. After that close, I saw that it had been respecting it a little bit, right? And like I said, I usually like to have my stop losses just above the kill zone, and or just above where, if I turn this off real quick, just above where it wicked out in order to take the liquidity, because the odds of it trading above that is not very high. You know what I mean? If there's no more liquidity to be taken, there's no more liquidity to be taken. And it's just as simple as that. Either you're right or you're wrong. And basically, I saw the supply close, and then I saw the H4 kind of receding back in a way. And once the H4 was ejecting the point of interest, I knew that it was very likely that I was going to be correct on the trade. If I just did a market execution at the kill zone, because I saw the kill zone, it was currently 418. So one New York kill zone is going to start here in a bit, but not before this London kill zone drop right here. So I did see a reaction to this supply right here. It was respected, and as a reaction, like, you can't be a perfect trader. You might do a market execution, and if you're risking 1% and you have 0.25 or 0.5% drawdown, that's fine. It's something maybe that, can work on, but that's fine. Market executions tend to be like that, fluctuate a little bit, and then it'll drop. So you can see right here that it seems as if this order block right here is being respected. That was formed at the kill zone. So we had H4 external liquidity confluence. We had, let me close this. We had H4 external liquidity confluence. We had on the RSI, we had the monthly overbought, meaning they're getting ready to sell. We had the weekly also overbought, which are the two higher time frame references I was going off of, technically speaking, but then I dropped down to the H4, and that's where I drew in my actual higher time frame reference. H4 was also overbought, had not been oversold. So that's three higher time frames that are in sync for the short in terms of the RSI 14. And essentially we dropped down to the 30-minute, and now we have a London kill zone rejection. I did do a market execution at 149.836, and now price is rejecting to the downside. Now I could stay up for another 2 hours. I am gonna go get some sleep a little bit, because I've been up since about 1 a.m. And wait for the change of character, and essentially a retest of this again, and then a break of structure as well. But I'm not going to be greedy. If I do get another entry, it will be during New York at around 7 a.m. I'll check to see if there's any opportunity. If there's not, I'll just let this run. But essentially, those are my confluences for this trade. Also, if you zoom out, and if I were to draw my fib from this impulse move to here, this is obviously going to be in premium territory, this order block right here. So pretty good trade, very good trade actually. Very minimal drawdown, about a 0.5% drawdown for a 5% reward, risking 1%. It's currently is doing very well, going into profit right now. And I did call this trade in the chat. Oh yeah, you don't want to delete? Whatever. I did call this trade in the chat right away, and they got the trade as well. So they'll be getting starting off their week with a 5% gain potentially. I always say potentially because I could be right on the trade. It could be a candle that spikes up, takes me out. You never know. It's 8 minutes and 53 seconds left this candle, but based on the H4 reaction and all those confluences I named off, including Asian range and external liquidity on the higher time frame. I know a higher time frame now after the retracement up to take external up top, they're going to come down and chase internal, right? So this is a good way to kind of like set your target too. If I was swing trading, then my target would be like right here, 142.824. That would be my long-term target because I know that this entire impulse will get ready to get taken, for example, in terms of internal and external liquidity. But I entered this on a 30-minute. She's dropping very nicely to start off the week with a 5% gain, right? Also, once again, another confluence for the short is that this RSI 14 was also overbought on, get out of here, overbought on the 30 minutes. So far we have weekly, monthly, 1 hour and 30 minute overbought confluences, as well as the liquidity Asian range, the kill zone at the H4 point of interest, and the H4 point of interest was at in premium territory above all of the external liquidity. And then on top of that, we have 149.162. Currently, we had a prime market terminal predicted level as well for today. The high was going to be 149.162. It states so. It was 149.162 right here, and it traded above that. That ended up being liquidity. 69.5% of retailers are buying this pair. Banks are net short. They've added negatives. They've added more bearish lots to their position. It's negative 0.4, and currently supply and demand levels here on the prime market terminal show a rejection of essentially like 1.5 for the high. And if you look here, 1.49162 is going to actually be the high. So those are my confluences for this trade right here for a 5% gain. Now imagine being able to get 2 entries, one for 10% potentially, or another 1 to 3 real quick on, after you get a couple of lower highs happening and chasing the exchange character and the brick structure. The price is likely going to come back up. You test this area, break structure again, and then at that point, if I have time in the morning, there's enough volatility, and it's not basically if it's before 10:30 a.m., I will, gladly get another entry and make this a 8% gain, right, in one day. So that's kind of like my confluences for this trade and kind of like what I was thinking in reference to that. I decided to add this to the video just because I had mentioned the euro odd, and I pretty much broke down euro Australian dollar in the beginning of the video. I did have another trade that was for a limit order, but it's not likely to trigger yet. Today was not the day for this trade. I do think that it is going to be coming back up, continue to come back up over time over the next couple of days to this point of origin. But I'll check out, I will watch this for the next few days and go from there. So very, very good trade. We're going to see how it works out. The confluences were there. So I did a market execution, and I will keep these right here and essentially wait for price to have the exchange of character and the break structure combination before I even consider a second entry. So I took this at the running kill zone, stop loss just behind the wick that took all of the liquidity, which would be this one right here, on this bullish wick right here, and the kill zone, and then I'm calling it a night. So with that being said, I hope you guys kind of got a better understanding based of this trade that I took based on kind of how I explained it earlier, and then the confluences I just mentioned. So I'll see you guys later.